Hey fellow Stock Guardians, it's Hoda Mer, founder and CEO of StockCard, and this is our Stock Market Daily Roadshow. It's August 23rd, 2021. Today I looked at the impact of Pfizer's FDA approval on the market indices and the stock itself. I also dug into the forward-thinking partnerships between retailers like Target and Disney, or Macy's and Toys R Us. We'll explore what that means for the future of retail and whether it's time to buy the dip in Target. Let's get going. The market indices started the week in the green. The market got off to a good start, boosted by optimistic FDA approval of the Pfizer vaccine. The uncertainty surrounding the impact of the emerging Delta variant has undoubtedly affected the market in the last few weeks. There were also price rebounds in other sectors such as oil, which was at its lowest level since May at the end of last week. The energy sector was up 3% throughout the trading session and contributed to today's market gain. Overall, the market had an excellent start to the week. Before we move on to today's stock analysis, I have a quick favor to ask. How do you like the daily roadshows? Do you like the format? Do you want it shorter, longer, or less frequent? What is the most important thing you'd wish the Daily Roadshow to share with you that you cannot get anywhere else? I'll leave a link to a quick feedback form in the show notes. I'll also leave a QR code on the screen if you're watching this on YouTube or Facebook. I would appreciate it if you can share your ideas. Go ahead, pause the show, and give us a few pointers. I'll still be here when you get back. Okay, welcome back. Thanks for filling that feedback form. Vaccines have been all over the media, and it's been no different in the financial investment communities online. You've probably heard plenty about Pfizer, ticker PFE, but today was a significant milestone for this pharma company. The COVID vaccine developed by Pfizer and BioNTech, ticker BNTX, was given FDA approval today, the first in its class. Up until now, all vaccines had been distributed under emergency orders from governments to combat the rise in the COVID cases. The FDA finally gave the green light to the company after reviewing 6 months of clinical data. Pfizer is up 2.5% and BioNTech's stock is up over 9%. The race for vaccine development is still on, and if you're interested in getting an overview of the companies involved, take a look at the COVID-19 vaccine race collection on StockCard. While Pfizer's stock may have been up slightly, the company was responsible for today's biggest gainer stock, Trillium Therapeutics, ticker TRIL. Trillium topped the StockCard's list of winning stocks with a whopping 188% jump. As it turns out, earlier today, Pfizer announced the acquisition of Trillium for $2.26 billion. Trillium Therapeutics will be a great addition to Pfizer's efforts and research for treating cancer, making the company more robust and innovative. Both companies have been developing treatments for cancer, so it should be a smooth transition to combine operations. Regardless of Pfizer's status among the leading vaccine developers, this latest acquisition reminds investors just how broad the company's range of products is. Looking at its stock chart, the company is profitable and generates more than $20 billion in free cash flow. And even with the recent price increase, the stock is still hovering in an undervalued range with a 20.9 price to earnings ratio and 3.9 price to book value ratio. Pfizer scores reasonably well across 11 criteria we use to evaluate whether a stock is a good fit for a dividend portfolio too. To me, this is a stock worth a spot in a dividend seeker portfolio. While Target, ticker TGT's stock managed to stay just barely in the green today, it has been falling steadily from an all-time high of $267 after the company released the financial results for this past quarter. Its earnings report on the 18th beat estimates, but investors weren't too keen on its growth outlook. Aside from its price action, Target is doing a great job at innovating the retail business, particularly when it comes to brick and mortar shopping. A story caught my eye today that is an excellent example of this. Disney, ticker DIS, is adding over 100 new mini stores inside Target locations, building off the 53 already operating while closing many standalone stores. If you've been inside a Target recently, you may have noticed Starbucks or Ulta beauty shops as well. The company is seeing the opportunity for more profit and traffic by subleasing parts of its stores to other companies. This reminds me a lot of the shopping mall business model. While shopping malls are struggling, the store-in-a-store concept seems to be taking off. Target already brings traffic in for core household items and then monetizes the traffic by selling high-value items from Disney and Ulta Beauty. Macy's, ticker M, is also bringing back the classic toy store Toys R Us in the same fashion, with over 400 locations planned next year. Both Target and Macy's stocks can be found on the Future of Shopping collections on our platform, and for a good reason. Specifically on Target's stock card, you can see it is now reasonably priced with a price to earnings ratio of 20 and price to sales ratio of a slightly higher than 1, which is surprising for a retailer with such strong operations and new innovative ideas like the store-in-a-store idea and concept we just discussed. Like Pfizer, Target is also a dividend-paying stock with reasonably well scores across all 11 dividend portfolio criteria. And just like Pfizer, Target seems to earn a spot on a dividend seeker portfolio. Folks, like I said earlier, we need your help to improve the Daily Roadshow. It's a quick survey and only takes a few minutes. It means a lot to us to have a show that you find useful and worth your time. I'll leave a link to a quick 2-minute feedback form in the show notes. I'll also leave a QR code on the screen if you're watching or reading this video on our blog or on YouTube or Facebook. I would appreciate it if you can share your ideas. Thanks for taking the time to lend us some feedback. And that's it for today. If you haven't already done so, please give a stock card a try, research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Picks page on the Stock Card platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. Like, subscribe, and share these daily market recap reports with your friends and fellow investors. Come back tomorrow for another episode. I'll see you then.